Mic is on. We are live. Hello, viewers of the tube. Welcome to another trading session. We're currently in the London AM. So far, this week has not been a great week so far. This week has been very slow. But I suspect we're going to sell off tomorrow or go bullish tomorrow because we're currently sitting in a critical area. If you can see, we've been, this is what you call a double consolidation. This is what you call a double consolidation. We've consolidated here, we've consolidated there. We've consolidated also here in this London session. A little bit of manipulation. So far so good. So far this has been the only move of the week. So far that's been the only move so far. That has been the only move so far. So this is the 15-minute chart. If we're to drop down to the 4 hours, because it looks like we haven't liftoff. When you pay attention from here, it looks like we're having a liftoff. However, I'll keep that just for reference so you can see. However, when you shoot to the daily, you see that big, when it shoots to the daily, that doesn't seem to show the same picture we've just seen on the 15-minute chart. You know, let's undo that. If we switch to the 4 hours, we're still sitting around this channel. We're still sitting in around this channel. Apologies, my phone is a bit laggy, but we're still sitting in around this channel. And we are in a consolidation within this channel. So let's zoom into that a bit. We are currently building a 4-hour rejection candle at the 87.88, sorry, at the 87.86 price. We currently printing a rejection candle. We'll see if this candle ends in red or if it goes green. So how are we looking to trade this then? This is what we're looking to see. We've consolidated and pushed up to the 87.8 in price tag. We are looking to see if price pushes to about 88 and holds. If price pushes to 88 and holds, finishes above 88 with a bullish engulfing, also with volume, then we'll be getting ready for an entry to take us to this level. We'll be getting ready for an entry to take us to the 100 MAC level, and that would be a sweet trade. That would be a sweet trade. However, this is more likely the scenario. We reject off this area. This is more of the probability I'm looking into. We reject off this 87 area. We find a bearish engulfing candle with volume declining. Fail to break. No need to wait for the break, for the retest. Fail to break, and then we take that down to about the 79 level. So the trade is going to do either of these two. I do not expect it to consolidate throughout the week, and I expect this to happen between today and the end of New York PM tomorrow. That's when I expect this move to take place. You know, we possibly, just a minute. We possibly dirty charts clean money. It's dirty charts for a reason. That's why the chart is a bit messy. So we possibly might do something like this. We possibly might go sideways and then down to the 80 level. We possibly might do that. Or we could just go straight down. So these are the three things to watch out for this next leg down, in my opinion, or this next leg up. So we want to see rejections around this area. We want to see rejections around this area, and that's our confluence to go down if it is supported by a decline in volume. We want to see that happen, because already that's the stronger confluence. And the reason being is, when you switch over to the daily, where's that gone? When you switch over to the daily, you see we in a decline. We're still currently being ruled by the bears from there. We're still currently being ruled by the bears from here. You notice how massive and how direct this sell-off is. Notice how direct that sell-off is. And notice how zigzagged this retraces. Notice how zigzagged this retraces. You know, Notice how zigzagged this retraces. So you have a direct sell-off. Notice how them candles just, and that happened very quickly. You have a direct sell-off there, and then you have the indirect, very slow retrace, unable to push markets higher. Literally unable to push the market higher. So at the moment, we're still trading within this channel. Possibly, we're possibly going to keep retracing until we hit this ceiling right there. And then the next leg down would print just as it did here. Just as it did from here. Notice that print. Just as it did from there. Notice that print. We're expecting another similar situation here, because we're still being controlled by the bears. The bears are in charge. And this is why it's always good to be a swing trader rather than a day trader. Like, I mainly swing trade. I find a position, I get in, and I execute. You know, if you're trading on the lower time frame, you're more likely gonna keep getting stopped out. Your stop loss is most likely gonna keep getting taken out. So you want to pay attention to the higher time frame, because the higher time frame is your money printer. The higher time frame gives you a better overview of the market. The higher time frame is your best friend. Okay? What did I say, guys? Let me hear you say that. The higher time frame is your best friend. The lower time frames, they will lie to you. They would show you a picture that doesn't really exist. It's an illusion. But with the higher time frame, you can see exactly what's going on. You know, so you can see we're in a channel here. Within the within the lower time frame, you would not be able to see this channel. You would not be able to see this in the lower time frame. In the lower time frame, all of this move would look like this move. You see? In the lower time frame, all of this move would look like this move on the lower time frame. If you don't believe me, let's check it out and observe the difference. Let's go to the 5-minute chart. Can you see? Now, notice that this blue line, that you're seeing here is the line of the channel that we've drawn. But see how massive that looks like on the little time frame. It looks like something's happening, but nothing's happening. This is literally all noise. You see, this is literally all noise. Why? Because watch, when we zoom out to the daily, remember what we've just drawn. When we zoom out to the daily, look, you can't even see it. You can't even see it. This is where the market makers take your money. This whole area, daily charts, this is where the market makers grab your stop loss. Because you can't see the big picture. But how can you see the big picture when you're busy trading on the lower time frames? You're short-sighted. You can't see the bigger picture. Can you see? All this, look how small that is. Look how minute that is. Look at that. You must refrain from trading on the smaller time frames. There's nothing in there but pain for you. There's nothing in this but pain for you. You have to expatiate so that you can appreciate the gift of the bigger picture, the gift of the higher time frame. Let's undo some of this. Back to the 5-minute chart now. You see, we're back to the 5-minute chart. It looks like a lot of stuff is going on, but there's nothing going on. We're back on the 5-minute chart. It looks like a lot of things is going on. You can see a clear downtrend, but there's absolutely nothing going on. Because let's assume, now stay with me here, I want to show you something, yeah? Why there's no money in the smaller time frame. The smaller time frame is for little kids, man. Stay with me here, I want to show you something. Because all this could be deceiving, looks could be deceiving, you know? That's why when you're picking your wifey, you have to pick the right wifey. You can't be picking your wife either on looks. You see, all this looks like we've gone from 94 or 93 to 83. But how much of this move are you going to be able to catch? How much of this move are you going to be able to catch? That's the question. So let's dive in. Pay attention, because I want you to catch this. I want you to get this. This could be the difference between profits and losses. This could be the difference between being able to stay in the game and go longer, or being able to lose all your funds just in a week. Some people lose all their funds in a day because they're using high leverage and they're trading exactly what the market makers are painting for them. Because you have to understand something. The market makers, they know what you're trying to do. So what the market makers would do is they would test out the waters. They'll give you a chart and see how you react to that level. And because you're always trading by the book, the same book that they wrote for you, you're trading by the book that they wrote and gave you, they know exactly where you're going to put your stop loss. They know that you're going to think, for example, it's respecting key levels here. It's respecting key levels here. They know that. And they know you're going to think, okay, it's going to respect this key level here or here. They know they're going to you make you think it's going to respect this key level right there. So you get in and you put your stop loss right there. You put your stop loss right there. What does the market do? You put your stop loss right there because you want to go down. Because you want to go down. The market makers would just do this instead. Yeah? Woo! And go down. What's just happened? You tell me. What's just happened there? The market makers have taken out your money, taken out your stop loss, and still gone in the same direction you were going to head. The difference now is you're no longer in the market. So you've lost your money. But it's still gone the same way. This happens mainly all the time in crypto. This happens a lot, frequently in crypto. So now, if you know the market makers are going to do that, now this is a tip. This is a golden nugget that I'm feeding you. I'm feeding you this for free. I'm feeding you this for free. If you know that the market makers are planning to take your money and they're feeding you things to confirm your bias so you can put your stop loss exactly where they want you to do, what do? You wait. Patience is key. You wait for them to show you their hand. And once the market makers have gone down and stomped out people's stop loss sitting possibly here, once the market makers have gone and stomped them out, what do? That's your key to enter the market. Because now you're entering at the exact place you would have been stopped out. That's your key to get in and go the direction you intended on going anyways. With a new greater stop loss that is also equally tight. And voila! That's your money printer go. Voila! So, the key here is, in crypto, there's only nothing but manipulation. Now, if you know that already, that there's nothing but manipulation, you already have an edge. You already have an edge. Your edge is to sit out and wait out for that manipulation to occur. And then you have a slice of that sweet cake that they don't want you to have. You know what I mean? Yeah. So, if you take anything away from this session, I want you to take away that trading on the smaller time frame is dangerous. It's like swimming in the deep ocean with the sharks. You're only human. How far are you going to swim? Where are you going to swim to? They'll catch you. They'll catch you. You can't play these games with the people who built these games. You want to trade on the bigger time frame. You want to trade on the daily. You want to trade on the weekly. F it, trade on the monthly. Because why? Because you can see the bigger picture. They're trying to lock you in this bit. They're trying to lock you in here. You have to rise above that. You have to rise above that so you can see what's happening from here. So you can see what's happening all around this. Why are you just watching this? One little candle, either way, would stomp you out. They want you watching this. They want you watching this. You need to watch this. Okay? So pay attention to the bigger time frames. Now, if you was to pull to the weekly now, let's go to the weekly. Weekly will give you a whole different picture, you see? Even on the weekly, you can see the picture changes drastically. But you don't have weeks to be waiting for a trade to pan out. So it's always best to stay on that day trade, that swing trade, that daily charts, you know. Of course, every now and then you're still going to get stumped out because nothing is perfect. But it's best to always have the whole picture than to have just this little picture. There's nothing here. There's nothing here. Nothing but pain. What you want is gain. This move is what you want. What's this? Well, so to recap what we're doing now, is back to what trade we looking out for. Let's take it back to, let's put it on the 4 hourly. To recap, this channel is just them giving you a picture of what they want to give you. This is them engineering liquidity. This channel is the market makers engineering liquidity. We're not sure which way it's going to go yet. Probability wise suggests further pain, bearish, you know. But there could be a Judas swing to trap people who are going to go shorts. People who stop loss is going to be here. There could be a Judas swing that takes them out. And then the real move very quickly happens. Very quickly. So that's what we're paying attention to for the longer trade. You know what I mean? Like for the longer swing trade. But for the trade of today and tomorrow, we're paying attention to this area. For those who are impatient and need to put that trade in today, to cash out today or tomorrow, we're paying attention to this. We're paying attention to this whole area. We're paying attention to this area. So what we want to see is if price gets rejected in around here, if price gets rejected in around here, we would start loading up to hit. We'll start loading up to hit this level. That would be the trade. If price gets rejected in around there, that would be the trade that would be aiming for. Now, if this area, sorry, if not rejected, if price goes above, my bad, if price breaks above this area and holds with momentum, we'll be looking to take this trade to the upside for today or tomorrow. It could pan out today or tomorrow. That's what we'll be doing. If price breaks above 88 level and holds confidently, we'll start loading up gradually to take this trade there. Now, if price rejects, does all its, whatever, and 4-hour candle closes below this 88 level, this 88.84 level, if price closes below this on the 4-hourly chart, depending on what session we're in, sessions are very important. I will teach you about sessions later on. Sessions are another key indicator of what might happen. You don't need all these indicators, all this 20 EMA, put the SA 50, 100 EMA, price is sitting above the VWAP. You don't need all that rubbish. If you know, you know. You don't need all that. You could look at the chart and you just know. Now, there are things you must know before you can know. Okay? Let me hear you say, there are things you must know before you know. And these are the things my channel is going to bring to light. These are the things I will be discussing as time goes on, as we build momentum. So the session of when you're trading is very important. Is it New York? Is it Asia? Is it London? When you learn the characteristics of the sessions that you're trading in, and you know the instruments that you're trading in, you can only go from power to power. You can only go from strength to strength once you know the characteristics of what you're trading. You don't need to be drawing bear trend lines. You don't even need to be following the trend, because the trend can be deceiving depending on what session you're trading. Some sessions are weaker. Some sessions are unable to do nothing but manipulate. You see? Some sessions can only do nothing but manipulate. So once you know these sessions, you pay attention. You know, you can't push the market higher than this today. So once you know some key things, it adds confluences to your trading. It gives you the confidence to enter and watch it play out. Because some people enter the trade and they're always shook. They enter just a little move up or down. They're scared. They exit. They think, it's going the wrong way. Then they enter the other way. No. There are some key things that are very important. Higher time frame. Key. I can't stress that enough. Key. Higher time frame is key. Higher time frame is your manna. It's your bread. Lower time frame is if you're just bored. You want to maybe gamble a little bit. Now, don't get me wrong. There are some people who are specialists at lower time frame. They're specialists at lower time frame. They know exactly what they're doing. So every strategy works if you've mastered it. You see? But in my humble opinion, the best strategies are the swing trades, because you can see it coming from a mile away. You can see it coming from a mile away, which makes it easier for you to set up your trade. in accordance to what you can see and what you can feel. It's like a truck, a massive truck going very slow on the motorway, and you've seen it from afar. You can kind of calculate, okay, before the trucks get here, I've crossed the road. Now with them bikers, them e-bikes that you don't even see these days, that you see on your street with them guys covered their face up, you don't know where they are. That's what the smaller time frame is. With sports cars, you can see that. Before you calculate and say, okay, maybe I could cross the... It's taking you out. You know what I mean? So yeah. Higher time frames are key. Understanding the instruments that you're trading is also key. If it is crypto, you know within crypto, they can push the price very high, they can push the price very low. A Judas candle can take you out. You know this. You know crypto likes to take out liquidity before it pumps. If you understand their characteristics, indices are also different. Forexes are different. So we're going to end the chart. We're going to end the live here. And we'll come back to it because nothing's happening. Let's go back to the 15 minutes so you can see. We're right here in the London session. Nothing is happening yet. Nothing is happening yet. So we're going to come back at the New York AM. You know, because New York has the power to move the market. You see? See? I'm dropping nuggets here. Are you picking them up? New York has the power to move the markets. Okay? Sometimes London would, you know, but most of the time London would try to squeeze you for all that you've got. It seems like London is moving with this candle. But remember, this is the smaller time frame. These candles are nothing. Let's watch London engineer the manipulation. Let's watch London engineer the manipulation, and I'll come back again probably about 2 p.m., 3 p.m. UK time, and we'll see what London did, so we can see if there's a setup in New York. Okay? Hope that makes sense. See you guys after.